Welcome to Everyday Economics, a podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can check out all of our great podcasts at americastalking.com. To support podcasts such as this one, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording this episode on Thursday, December 8th, and joining me, as always, is my dear friend and colleague, Dr. Orphe Divounguy. He's a PhD economist, and he's going to help us figure out what is going on with gasoline prices right now. Like, I don't know that we've made gas prices great again. Are you going to start wearing a red hat with white letters that says that on it, or what?
No. But let me tell you what, I'm happy to go to the pump, and I'm happy to see that number tick down. And it's not just because gas prices are going on and I'm cheery for myself. It's a sign that, a overheated economy could potentially get back to normal. You have all these geopolitical tensions, you have the climate risk, all these supply shocks that combined with, bad policy, potentially.
Yeah.
I add potentially here, allegedly.
Allegedly. Yeah. You say allegedly, and then you can say whatever you want right after that, huh? Is that how that works? Okay.
The point is, we want to bring prices down because consumers run the risk of running out of their savings, and then we're in trouble.
So here's the grip. I filled up last night here in suburban Chicago, and I paid, all taxes included, $3.25 a gallon for 87 octane gasoline at a Tier 1 station. I bought it at a Shell gas station. Every other gas station in my area was at that price or slightly lower. So the local Mobil station, which is ExxonMobil, and even like, our convenient marts, which are regional, that gasoline, which I'm not exactly sure if that's Tier 1 gas or not. It might be, but they were all between like $3.20 and $3.25 a gallon. Now, that is significantly less than what I was being asked to pay. I would say even 2 months ago, that we were well over $4 a gallon into the 409, 419 range. How has this happened? I mean, what are the factors here? I had somebody ask me, who's a fan of the show, are the lockdowns in China, which have brought some cities to a standstill, is that having an impact? Is there a global influence on what's happening? Does this have something to do with Russian production? Does this have something to do with something that's going on at OPEC? What's your best understanding of why fuel prices at the consumer level are down?
So you had, I think, a couple factors. And again, this is just me kind of piecing things together, is, President Biden authorizing the release of 180 million barrels of oil from the country's strategic petroleum reserve. Could have played a little role, right? Surge in supply.
Mm-hmm. Prior to the election. Wink, wink.
That's right. Right. And then you have potentially, the lockdowns in China. You also have, a somewhat milder, warmer winter than I think we were expecting.
I mean,
so far, so
true.
good. So far, so good. I think that midway through 2022, people were scared that like the winter was coming, and that we'd be in trouble. It feels good. The end of the summer travel season, things are kind of coming back down to earth. Now, of course, there are risks. China is reopening. So there's going to be a lot of demand coming online.
Wall Street Journal had a story about this today that broke. And let me pull something from Wall Street Journal. The global benchmark for crude prices has since plunged about 40%. This is from the peak, from its war-driven 2022 high. So connection there to obviously what's happening in Ukraine with Russia. Russian oil has kept flowing to the market, and stringent lockdowns in China, the world's biggest consumer of commodities, has hurt demand. The U.S. crude futures contract lost 3% on Wednesday. So we're talking about like Wednesday, December 6th, to settle at $72.01 a barrel. Brent crude slid 2.8% to $77.17 a barrel. So like if you get like kind of inside the middle of this story, if you get right down to it, Wall Street Journal is suggesting that this is a factor of Russian prices going down, the lockdowns in China, and then, just the impact on demand overseas. Do you think there's maybe a little bit more to it than that?
I mean, with demand slowing into 2023, most expect at least a mild contraction. I expect at most a mild contraction. I'm a little bit optimistic, but that ought to, as energy demand slows, that ought to bring down prices.
Let me ask you this at a consumer level. Do you think that consumer behavior, which we have talked about off and on this show, and then when we try to get a handle on how this affects real people. Again, it's everyday economics. This is not intended for PhD candidates, although we have a PhD on the show. Trying to make it simple or as straightforward as we possibly can. Do you think that people are hurting to a degree in their own personal economic situation, that they're just simply buying less gasoline, making fewer trips, maybe not getting into the car as often as they did before because they have to think about the expense of doing so?
I mean, some people just can't do that, right? Some people can't do that. And I think lower income families end up paying a much larger share of their income on things like food and gas.
Because they have to drive to work every day. If you want to make it, you got to drive to work every day, right?
That's right. And I'll take my example. Working remotely means I will reduce the number of trips to the office. I only go when I have to. Or when I think it's going to be extremely beneficial for me to go into that office. And so I have trimmed down considerably. Instead of fueling up once a week, I'm fueling up every other week. So, yeah, I mean, I can see it in my own behavior that I am, there are certain things that I'm probably buying a little bit less of. And maybe it's not that you're thinking about inflation. Maybe it's just that when you start to see your savings erode really quickly, and you start to see your budget shrinking, you start to reevaluate what you need and what you don't need. I think a lot of people do that. For example, we look at the housing market and we notice that areas tend to be high income, relatively wealthier, are way more responsive to changes in economic conditions. They really adjust really rapidly. Even if you look at $1 million homes, they're shrinking. People are buying smaller. Competition is stronger at the bottom, right? And and you have people making these adjustments in response to changing economic conditions. I think there's a lot of that going on.
Well, I'll tell you what, and I'm going to take the last word on this. There's been a lot of buzz about President Biden and refilling the strategic oil reserve. With numbers where they are now, this is the time to be buying. With that, Orphe, thank you very much. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other high-quality podcasts at americastalking.com.